Guys, let's do Ntuli Petsi. This is an excellent question, and it doesn't only test whether you understand inventory per se and the valuation of inventory, but also it includes quite a lot of manufacturing. So this is really, really a good question, which you should work out in detail and make sure that you really understand what is going on in the question. Ntuli Petsi owns a manufacturing sole proprietor business called Cutie Dolls. The entity is in the business of manufacturing the most adorable plastic dolls. The company buys plastic from Plastic Mania plc, an entity situated in the United Kingdom, and paint from the Paint Shop, a local company. Cutie Dolls has a 30 June year end. Cutie Dolls is not registered for VAT, very important. The process of manufacturing is quite simple and can be explained as follows. The plastic is melted and poured into molds. The molds are then taken to the oven and are baked for approximately 4 hours. After the molds are cooled off, it takes almost a full day for the process to be complete and to complete the dolls. Let's read it. It takes almost a full day before the process to complete the dolls can be continued. The dolls are removed from the mold, after which the intensive labor starts. A face is painted onto each doll, as well as the fingers and toes are painted to appear as if the dog has fingernails and toenails. The paint is only issued by the factory once the dolls are out of the molds. All dolls are manufactured into one size. In order to manufacture one cutie doll, it requires, very important, 500 grams of plastic and 100 grams of paint. So that is what I need to complete one cutie doll. Good. Cutie Dolls adopted a policy to disclose inventory at year end at a low of cost or net realizable value. The cost of inventory at year end is calculated by the application of the first in, first out method for all types of inventory items. Extremely important. The following information in terms of raw materials can be summarized as follows. Opening balances as at the beginning, 2,500 kgs, it costs 62,500. And I've said before, once you see units, it's best to work in a table format. But in this question, what they want from you is the general ledger accounts. They want you to do the general ledger accounts of Cutie Dolls for the year ended 30 June 2018, raw material plastic, raw material paint, work in process and finished goods. So you will see that I do the answer in table format, but I do the table within the general ledger account. If you cannot work neat and tidy, and if you cannot work very clearly that we can read whatever you're doing, then do the calculations in table format and then insert just the final figures in the general ledger account. Here I've combined the two. If you are able to work quite tidy, neatly, readable, then you are welcome to do it the way that we have presented it in the memo. Good. So we had plastic on hand in the beginning, we had paint on hand. We had imported stuff, we had import duties, we've purchased in cash inclusive, we had transport cost. And here we have completed units of goods sold during the year, which was 25,000 units. And we had units of goods transferred to completed goods for the year. So that was manufactured, 26,500 in the year. Good. Cutie Dolls had no opening balance pertaining to work in progress in the beginning of the current financial year. But at year end, 500 dolls were completed up to only the plastic mold process and regarded as work in process. No paint was issued for these 500 dolls at year end. Now, I think this is about the only question that you have where you can actually practice how to calculate work in process. There was none in the beginning of the year, but at the end of the year, we had 500 dolls which was completed just up to the plastic mold phase, so no paint has been added. The only overhead that could be allocated to these 500 incomplete dolls doesn't only cost the plastic. There is some input needed over and above the plastic to make sure that those dolls are in the molds. Now, that overhead cost to complete these 500 dolls partially was an amount equal to 1% of the direct labor cost for the year. At the beginning of the current financial year, 7,500 completed dolls were on hand at a cost of R28 per doll. So this was finished goods. There was no inventory written down to net realizable value in any previous financial year, nor in the current financial year. Over and above the items mentioned thus far, the process also requires the following. First one, labor. Good, let's do that. Each doll takes 2 man-hours to manufacture, during which time the painting processes takes place. Throughout the year, 5 employees were employed. Each worker, each one, is remunerated at the same rate per month. Important, we are working with a year, and the details are as follows. The net wage, now what do we take to the income statement? We take the gross wage. So the net wage was R5,000 per employee per month. And the income tax pay as you earn per employee per month was equal to R1,200. So what was then the gross wage per employee per month? 6,200. How many employees did we have? We had 5 employees. How many months in a year? 12 months in a year. So what was our direct labor cost? 372,000 rand. Then one supervisor is employed in the factory, so this is indirect labor, and he is remunerated 6,500 rand per month, irrespective of the number of dolls manufactured. On 30 June 2018, a bonus of 10,000 rand as agreed by management was still to be paid to the supervisor. So what was his remuneration package for the year? 6,500 times 12 months, which equals 78,000 rand. And over and above that, he also received a bonus of 10,000 rand. So his total remuneration package for the year, 88,000 rand. Good. Other relevant information. The manufacturing process entails the use of 2 machines, and it can be summarized as follows. And then they give us the details of the oven and the smelter, and you have to go and provide for the depreciation on the oven and the smelter for the year. Then other related information. The only other costs that can be allocated to the manufacturing of the cutie dolls are rent expense, water and electricity charges, and cleaning materials. This can be summarized as follows, and when we get to the overhead cost, we are going to work with those. After investigation, there was also a rent increase. So when we do this, we will look at that. Okay, so what I want us to do is to open up all our general ledger accounts. So draw T accounts for raw materials, plastic, raw material paint, work in process, and finished goods. And then we start completing these accounts. Let's start then with raw materials, plastic. Now remember, all dolls are manufactured into one size. In order to manufacture one cutie doll, it requires 500 grams of plastic. And we're going to do plastic now, so that is important. We have to apply the first in, first out method of inventory valuation, and we're going to start off with our opening balance. In the beginning, we had plastic. There's our plastic. we had 2,500 kgs at 62,500 Rand. So if we're going to open up material plastic, opening balance, it was 2,500 kgs at 62,500 Rand, and that works out at a unit price of 25 Rand per kg. And there is our Rand value column. So in total opening balance, 62,500. Good. We have imported some of this plastic. 5,000, remember, Ntuli Petsi is not registered for VAT. Cutie dolls is not registered for VAT. Okay. We imported 5,000 kgs. The cost was 150,000, and there was import duty on this cost of 5,000. So again, we have bought 5,000 kgs. The cost of it was 150,000. The import duty was 5,000. So the total cost of that purchase was 155,000. 155,000 divided by the 5,000 kgs that we've purchased give us a unit price of 31 Rand per kg. Then furthermore, products purchased in cash inclusive of VAT, well, we are not a VAT vendor, so we cannot claim the VAT. It was 7,000 kgs for 245,000, and then there was transport cost on that purchase, applicable to that purchase, of 7,000 Rand. So we bought the 7,000 kgs, the cost price was 245,000, the transport cost was 7,000, so 245 plus 7 gives us a total purchase price of 252,000. So 252 divided by the 7,000 kgs that we've purchased give us then 36 Rand per kg. How many kgs did we have available to issue? We had 2,500 to start off with. We bought another 5,000 kgs. We bought another 7,000 kgs. So we had available to issue 14,500 kgs. Right. Now we have to determine how many kgs did we use in this production process. And that is where this one becomes important. We use 500 grams of plastic for one cutie doll. And how many cutie dolls have we completed in this period? Units transferred to be completed, 26,500. Now, what is important here, guys, there you see we have a price per kg. We have there a price per kg. So if that is 500 grams, how many kgs does one cutie doll actually use? One cutie doll then uses a half kg. I have to convert everything into the same denomination, otherwise I cannot work out a unit cost. Right, so for 26,500 dolls, we have used a half kg each. So in total, the total kgs that was issued to complete those 26,500 dolls was 13,250 kgs. But then if you can remember here, work in process at year end 500 dolls were completed up to only the plastic mold process. So I have already utilized the plastic for those dolls which was incomplete at year end. So those 500 dolls also used a half kg of plastic to get to the stage where they were at year end. So 500 multiplied by a half kg each is going to give you then 250 kgs. In total, how much plastic have we used? We have used then in total 13,500 kgs of plastic. Now, our valuation methodology is first in, first out. So that then means that we've used firstly that 2,500 kgs, which costed us 62,500 Rand. 2,500 costed 62,500. We have used then that 5,000 in totality as well, and the cost involved there was 155,000. So issue 2, 31, 5,000 at 150,000. We have said here we've used in total 13,500. We have now counted for 7,500. So the difference that we've also used must be the 13,500 less the 2,500 less the 5,000, which gives us another 6,000, which was used out of this last batch that we've purchased at 36 Rand per kg. So the last issue was 36 Rand per kg multiplied by the 6,000 kgs, which gives us 216,000. So in total, what did we put into the production process? Those three figures all together. The 62,500 plus the 155,000 plus the 216,000, which gives us 433,500. So in our work in progress, raw material plastic on the debit side, 433,500. And now we can go and determine our closing balance. There are one of two ways that we can do that. We can just simply take the balancing figure and say, well, it was 36,000. But we can also work it out because we said, well, the last batch that we've purchased was 7,000 kgs. We have utilized 6,000 kgs of that 7,000 kgs. So how much kgs is left of this last batch? 1,000 kgs. What was the cost? 36 Rand per kg. So therefore our closing balance must equal 1,000 kgs multiplied by 36 Rand per kg, which gives us 36,000 Rand. And now if you add up and you balance your thing, you'll see that your account is in balance. The raw material paint. We had in the beginning, on 1st of July, 1,000 kgs paint, and it costed 8,000 Rand. So in our raw material paint opening balance, 1,000 kgs at 8 Rand per kg gives us 8,000 Rand. So there it is in total, 8,000 Rand. Then we have purchased in cash inclusive of VAT. We are not a VAT vendor, so we cannot claim VAT. So therefore we're going to capitalize the full 63,750 Rand, and that was 7,500 kgs which we have purchased. So 7,500 multiplied by 8.50 per kilo gives us in total 63,750. How many kgs were available to be issued? We had 1,000 in the beginning. We purchased another 7,500, so we had available to issue 8,500 kgs of paint. Important, how much paint do we use per doll? We use 100 grams of paint per doll. Again, when we purchased in kilograms, not in grams, so therefore we have to convert that usage into a kilogram figure. So it's 0.1 kg paint per doll. Good. How much paint had we used? We have completed 26,500 dolls. For each and every doll, we've used 0.1 kg worth of paint. So therefore, 0.1 multiplied by the 26,500 gives us in total 2,650 kgs of paint that we've used during the year. First in, first out says I've used that 1,000 kgs first, and the cost of that 1,000 was 8,000 Rand, and there it is. And then in total we have used 2,650, there we've worked it out, so that means we must have used 1,650 kgs of the last batch, which was acquired at 8.50 per kilo. So 8.50 per kilo multiplied by the 1,650, that will bring you back to a total usage of 2,650 kgs of paint. What was the unit cost of that 1,650? 8.50 per kilo. So the total cost there, 14,025. If I add these two together then, I get a total paint that was issued into the production process, because those dolls that were partially completed at year end had no paint was issued for these 500 dolls. So we haven't used one single drop of paint for those half completed dolls. So that means in total we've only used the 22,025, and we can post that to our work in process, raw material paint 22 025. Good, let's move now to our work in progress as well as our overhead costs. Direct labour costs. Here we've worked it out. We've already said that 5 employees. Each of them had a gross wage of 6,200 Rand per month. And then there were total of 12 months in the year for the 5 employees. And that gave us a total cost, direct labour cost of 372,000 Rand. What would we have done? We would have debited our direct labour, credited bank, and at year end we would have credited our direct labour cost and debited our work in progress account. It is direct labour 372,000 Rand. Good, then we had indirect labour, and here we've already worked out the indirect labour cost. It was 6,500 Rand per month, which gave us 78,000 Rand, and then you also received a bonus of 10,000 Rand. So in total, his remuneration package was 88,000. Now this is an overhead cost because it is indirect labour. So in our manufacturing overheads account, we would have had the supervisor's salary of 88,000 Rand. Good, other relevant information. There are 2 machines and it can be summarized as follows. Now the first machine is the oven. The oven has a useful life of 10,000 hours. It has a cost price of 125,000 and an estimated residual value of 10,000 Rand. So we have to use the unit of production method based on the number of hours utilized for the oven, and here's the carrying cost at the beginning of the year. So let's work out the depreciation on the oven. It is the depreciable value is the cost price of 125,000 Rand less the estimated residual value of 10,000 Rand, and that I'm going to do that all in a one-line item. That gives us a depreciable value, and that we're going to divide by the capacity of this oven, which equals 10,000 hours. So our depreciation charge is going to be 11.50 Rand per hour. In the current year, the oven was used for 1,500 hours. So we're going to take that 11.50 Rand, we're going to multiply that with 1,500, and that is going to give us a total depreciation charge of 17,250. Good. So we can include that in our overhead cost. Depreciation on the oven, 17,250 Rand. Then on the smelter useful life 10% per annum, cost price 88,000, estimated residual value 8,000. The smelter had a carry value at the beginning of the year of 70,500, and we have to use the reducing balance method. So the reducing balance method, I use the carry value as at the beginning of the year, 70,400, multiplied by my rate of 10%. It's the only method where I ignore the estimated residual value. And why? Because it's already included in the 10%. So 70,400 times 10% gives us 704. So in our overheads account, again, we're going to say this depreciation on the smelter, 7040. Then we're done with that one. Right, then we also paid a few other costs. We said here, the only other cost that can be allocated to the manufacturing of goodie dolls are rent expense, water and electricity charges, and cleaning materials. Now, all of those are also overhead costs. It can be summarized as follows. Rent expense was 60,000 Rand for the year. Now, they tell us here, after an investigation, the accountant found that the lessor of the property increased the rent with 10% as from 1 June 2018, so at the beginning of the last month of the year. But this was never taken into account when payment for June was made. So we made the same payment for 12 months of the year, and that amounted to 60,000 Rand. So if we work out the monthly payment, it gave us 5,000 Rand per month. Now 5,000 Rand per month escalated by 10%, which was the last month, equals 500 Rand. And we never paid that 500 Rand, but it is a charge or an expense that we've incurred. So obviously we have to add there that 500 Rand. And that then gives us total rent expense of 60,500 Rand for the year. So in our overhead account, there it is, rent expense, 60,500 Rand for the year. The next one is water and electricity. We paid during the year 18,500 Rand. But at the end of last year, closing balances as at 30 June 2018. So this is the current year. Accrued expense, water and electricity. Opening balance as at 1 July 2017. So that is the closing balance at the end of last year. That's correct. I owed 1,500 Rand of water and electricity in connection with the 2017 financial year. So if I've paid 18,500 Rand, that would have included last year's expense of 1,500 Rand. So that then means that 1,500 Rand of that expense has already been taken into account last year, and therefore I have to take it out of this year's expense. So my total water and electricity expense will only be 17,000 Rand. So again, in our overheads account, we will account for water and electricity. Where is that? Here it is, right at the bottom, 17,000 Rand. Okay, then cleaning materials. I've paid cleaning materials of 10,700 Rand. At the end of the current financial year, I still had 1,750 Rand of cleaning materials on hand. So therefore, I have to take it out of my expense for the year because I haven't used it as yet. So that means then at the end of the day, my total expense was only 8,950 Rand. Okay, so in my overhead expense account, cleaning materials, 8,950. There it is right on top. So we have the cleaning materials now, we have the supervisor, we have depreciation, we have rent expense, we've got water and electricity. So we can accumulate all our overhead account, our overhead expenses, and that gives us a total of 198740. Where do we take overhead expenses? To our work in progress account. So we credit our overhead account and we will debit our work in progress account, 198,740. Good, now we are not done with work in progress. They've told us here, right here, that we have these 500 dolls which was partially completed at year end. So we have to assign a cost to those 500 dolls. Those 500 dolls was completed up to the molding stage, the plastic mold stage. So they've all used, we've already established that, a half a kilo, so in total 250 kgs of material. So we have to cost that 250 kgs of material, which we in fact have already done when we did this. We said this was a 250 kgs. It was issued in this last issue of 36 Rand per kg. So therefore, those 500 dolls used a half a kg at 36 Rand per kg, which will give us then our material cost. Then that is not the end. They also say that we have incurred some overhead cost, and the value of that overhead cost is equal to 1% of the direct labor costs for the year. Now, we have already established the direct labor cost for the year. There it was, the 372,000. So 1% of that 372,000 is going to form part, there it is, of our closing balance. So our total closing balance then will be the material component plus the 1%, which is 3,720 in connection with the overhead costs. So in total then, 12,720, and that is going to be our closing balance. After we've worked out our closing balance, we can now determine what was the cost of these dolls which we completed during the year, which was transferred to our sales department. That is our balancing figure there. 1013,545. We're going to credit this account and we're going to debit our finished goods 1013,545. Okay, let's have a look at finished goods. At the beginning of the current financial year, we had 7,500 completed dolls on hand at a total cost of 28 Rand per doll. So in our finished goods, our opening balance, 7,500 dolls at 28 Rand per doll, which gives us a total of 210,000. We've established that the cost of completed dolls for the year was 1013,545. And they also told us that that was equal to 26,500 dolls. Therefore, we can now work out a unit price per doll as well. So we take the 1013,545, we divide it by 26,500, and that gives us 38 Rand 247 per doll. Good. So we had available to sell 7,500 plus 26,500, 34,000 dolls. How many dolls did we in fact sold? So they've told us units dolls sold during the year, 25,000 dolls were actually sold. So if we had 25,000 dolls available to sell, sold, we had 34,000 available to sell. How many dolls do we have at year end? 34 less 25, which will equal 9,000 dolls. What was our cost of sales? Well, we would have sold those 7,500 dolls first, and the cost associated with that was 210,000. And then we would have sold 17,500 of this batch that we've completed during the year at a total cost of 38.247. So 17,500 multiplied by 38.247 gives us a total cost of 669,322. Total cost of sales then is that one plus that one, 879,322. So those 25,000 dolls that we've sold costed us 879,322. Our closing inventory, we've already said we had 34,000 dolls, we've sold 25,000, so we have 9,000 on hand. Of which batch? Of the last batch of 38.247, and that is the total value of our closing inventory, 344,223. And then if you add everything together, then you'll see that this account is also in balance, and I'm happy because that's the end of the story. A very good question.